My name is Frayne Olson. I'm the crop economist and marketing specialist with NDSU Extension. We're going to be talking about the soybean markets. There's a lot to talk about. I'm going to try and give you kind of a high-level overview. Obviously, looking forward to your questions as we finish things up. So, few things that happened this morning. We did get, as of about 30 minutes ago, we did get an update to the USDA WASDE report. So every month, the USDA updates their forecast or projections for both production and consumption of the major crops, not only in the US, but also on the global level. This is the information from the report as of 11 o'clock. There was no change from last month, which made updating my slides very, very easy. So that was good thing for me. No basic changes. We were not expecting any major updates, especially for the soybean numbers. We did get a little bit of an adjustment in the corn numbers. USDA did increase their forecast for corn exports, which was kind of anticipated. And obviously what goes on in the corn market has some spillover effect into the soybean market, and that's one of the reasons I'm commenting on it. So I won't go through all these numbers. Don't worry about it. I do want you to kind of look at the bottom line. I want you to drop to the bottom line. So that bottom line represents the amount of reserves, or how much grain are we going to have in the bin just before harvest of next year. So the column in red are forecasts. Now the production side, the top half of this, is pretty well known. We don't have the final official numbers, but the production numbers are going to be very, very close. We are still trying to figure out what the total consumption numbers are going to be. And right now, during the winter months, that's really where the market is focused on. What's going on with the consumption, the rate of consumption for the crops that we've been growing. And then you take total available supplies minus total available use, and you come up with the forecast for ending stocks, which is the red number on the very bottom, the 470 million bushels. Now, the point I'm trying to make is look at the trend. So if we look at the green number from 2 years ago, we'll look at the blue in the middle column from last year's numbers. You see that we're starting to build our inventories. Okay, now this graphic shows those blue bars on the bottom represents the stocks to use ratio. So we're taking those ending stocks numbers, those numbers I just showed you, and dividing by our total consumption to get a percentage. So what percentage of our needs are going to be in reserve in case there's a problem? And the reason I bring this up is because that percentage number has a huge impact on market psychology. If there's a belief in the marketplace that we're going to have big inventories, that the bins are going to be, busting at the seams by harvest of next year, we tend to see lower average prices. Nobody's really worried, okay? We have a lot of supplies, buyers not worried about the availability of soybeans, and we tend to get relatively low prices with more stable prices. So we don't see a lot of volatility, a lot of bouncing around. On the flip side, when those blue bars are really, really small, when we have very, very tight supplies, when we're coming in on fumes, when the bins are essentially empty before the harvest of next year, we get the exact opposite. We tend to see very high prices with a lot of price volatility, because any new piece of news has some shock value. The buyers are really, really nervous. The people that have inventories left as sellers are trying to maximize what they can get out of the marketplace. And so I just wanted to show these numbers, and we're going to compare them to historical prices in the futures market. So I pulled this graphic at about 9 o'clock this morning. So the prices you see in the far right-hand side in the little blue box was the current futures price for July soybeans as of about 9 o'clock this morning. Okay, it's very, very close to what we're seeing today, right now. Okay, the reason I show this is that blue line that bounces around in the middle is the historic futures price going back to 1990. So if I look back at the inventory numbers, notice that goes back to 1990 as well. Now, this has not been adjusted for inflation, and so when you look back to 1996, those prices are in 1996 dollars. Just understand that adjusting for inflation is a really kind of math-intensive process, and I cheated and just pulled this graphic because it's really nice and easy to grab. The point I'm trying to make is if we look at what's happening in that 2010 to 2015 time period, so we're looking at this range right here versus this 2015 to 2020 time period, versus the time period we've come out of now since about 21 through about this 23, 24 time frame, you can see that general pattern, right? When inventories are really, really low, when inventories are tight, we tend to see, we tend to see very, very high prices with a lot of price volatility. It bounces around like crazy. When we have big inventories, when inventories are, the bins are full, we tend to have relatively low prices and much more stable prices. Now, the last couple of years, we're coming out of another time period when we've had relatively tight supplies, and now look what's happening to our inventories. So this red bar on the far right-hand side is the current forecast for inventories of soybeans for the crop we just got done harvesting. And as a result, we are starting to see these average prices start to come down and stabilize. The whole point I'm showing this is that there's a strong relationship between prices and price volatility, as well as what we have in inventories. And that's why, as a marketing guy, I spend so much time looking at and talking about, well, what's the forecast for inventories versus what we actually expect it to be. Now, one more comment before I move on. I just want to remind everybody this 2018-2019 time period, when it had really, really high inventories, and also into this 2019-20 time period, that was during the last trade war we had with China. The reason we were able to bring our inventories down so quickly into this 20 and 21 timeframe was because of that phase one trade agreement. The Chinese agreed to purchase more agricultural products from the US, and soybeans was on that list, and they came in and bought up a lot of extra purchases, a lot of extra supplies, which brought our inventories down, which led then again to these higher prices. So just for a reference point, I've circled that time period when we had the last trade war. And now, as I'm sure you've been watching the news, there's a lot of talk about additional tariffs, in particular with China, and what that might mean for a second trade war with China. What was that going to do to soybean prices? What's that going to do to corn prices? To be very blunt, I don't know. The main reason I don't know is because we don't know exactly how this is going to play out. You know, last time there was a lot of surprise. This time, people have a better idea of what typically works, what doesn't work. There's already conversations going on in the marketplace about the United States and the Chinese officials getting together and having negotiations or talks even before additional tariffs are placed. We're going to have to wait to see whether that happens or not. But if there is additional tariffs on Chinese products, will the Chinese retaliate? I don't know. If they do retaliate, what will that look like? I really don't know. But I just want to reemphasize there is downside risk in today's pricing simply because of those concerns about what's going to happen with international trade and China specifically. Okay. So let's talk about the uses for soybeans, because right now that's what's influencing the marketplace, influencing market psychology. We have two main uses. The blue line is crushing. We send the soybeans into a crushing plant. They're crushed into soybean oil and soybean meal and used for a whole bunch of things. And notice over about the last almost 15 years, almost 20 years, we've had a nice steady increase in the amount of soy going into the crushing industry. That's not only the new plants that have come on, for example, the plants here in North Dakota, but it's also the expansion of existing plants. Now, because the crush plants are relatively stable demand base, they don't fluctuate a lot from day to day or week to week or month to month. They're important for long-term prices, but they don't have that shock value or that uncertainty that's created by, well, we're going to get a surge of new consumption. And that's why I tend to focus a lot on the red line, which is the exports line. And you can see that our exports from year to year have been exceptionally volatile, in particular during that trade war time period. Okay, now the little dotted lines on the far right-hand side are the current USDA forecast. So that's the forecasted number relative to what we have seen historically. So I'm going to spend a lot of time talking about exports and who's buying U.S. soybeans. Now, this is the information we got very end of last week. I want to explain this table very quickly before I move on. So the four columns on the left-hand side are 12-month totals for exports. So we're counting how many bushels, or in this case, metric ton, of soybeans have been exported. So if you look at the very bottom row, that's the total exports for the marketing year. Okay, not a calendar year, but a marketing year. And what I've done here is broken it down by country. So it's not only how much are we selling, but who's buying. Okay, and then the two columns on the far right-hand side are what's called year-to-date totals. So the far right-hand side is the export sales or export commitments. These are contracts that have been signed for the delivery, sale of U.S. Grains, or U.S. soy in this case. They may or may not have been delivered yet. I'll show you another graphic in just a minute that will show deliveries as well. Okay, so these are sales. So the far right-hand side column, that's how much we've sold of the 2024 crop. Now, right next to it is the year-to-date totals from last year. So if you notice, we got two columns that are labeled 23, 24. One of them is the 12-month total, and the other one is the year-to-date total. So let's go through this very quickly. Notice the top row, largest buyer of U.S. soybeans is China. Not a great big shock or surprise to anybody. If you do notice, there's been a slow decrease in our export sales of soy, U.S. soy into China. Recognizing that 2020-21 time period, the one column on the far left-hand side was during that phase one agreement. So that was the high water mark. Okay. Now, if we compare year-to-date sales, what's happening today, notice the Chinese have been buying less than they did this time last year, and last year's totals were not very whippy. So they're still our number one buyer by a long ways, but the pace, the amount that they're buying from the U.S. so far this marketing year is behind the pace that we saw last year. Our number two customer, even though it's a distant number two, is actually Mexico. So again, anytime that there's conversations about having some kind of tariffs or even potential or developing trade war between the United States and Mexico or the United States and Canada, raises some concerns, raises some anxiety in the marketplace about what does that mean for not only soy, but also for corn and wheat. Okay, Mexico's number two. I would say they're pretty much right on pace with the amount that they had last year. Their seasonal purchasing patterns are a little bit different than China. Indonesia last year was our third largest. They're well behind the pace, or about the same pace as this time last year. Indonesia came in and bought a whole bunch of U.S. soy kind of late in the season. Okay, so the fact that they're at lower levels today is not a concern to me. Japan, a little bit behind last year's pace, but again, the timing of their purchases are a little bit different than they are for other countries. Spain, a very large buyer, a very large consumer. They're pretty much right on pace. Germany, a little bit behind, a little bit ahead of last year. And then we have Egypt. And in my opinion, the Egyptian purchases are kind of the surprise in the marketplace. They've already purchased almost the same amount today as they have the entire last marketing season. And so that's a little bit of a surprise, but let's hope that that export pace continues. The kind of second to last row on the very bottom is ROW, rest of the world. So that's all of the other soybeans that we sell to all of the other countries that are not listed. The reason I want to focus on that is notice that there's this large increase in this rest of world category. What that really means is because our soybean prices are starting to calm down in the global markets, becoming much more affordable for a lot of other countries, we are seeing an increase in the export pace. When you look at total exports, we're getting some better sales. So if you compare how much we've sold this time this year relative to last year, we are ahead of last year's pace by about 12%, which is a very good signal to me, but it means that there are a lot of buyers that are very price sensitive. Now, again, the concern with any kind of trade tensions with the United States and China is by far our number one buyer. And when that number one buyer backs away, it's very, very difficult to find some alternative countries to be able to purchase those large volumes. The other comment I want to make is about timing. Okay, this is the export sales. These, again, the contracts for sale by week. So we have this really big, heavy seasonal pattern. We tend to have a lot of our sales that occur just after harvest and into about that December, January timeframe. Now, deliveries can occur a little bit later, but there's this heavy selling season we have usually into about the end of January. And I do expect that to continue this year, even if there are some trade tensions between the United States and China. I do think, and from what I've seen, China is trying to purchase some additional soybeans from the U.S. to build up some reserves and inventories in case there are some additional trade problems that happen later on. So we are in a really good pace this year relative to history. Again, the big question is, will that export pace continue? And that's going to have, in my opinion, some implications for the timing of sales and what kind of price volatility we might be looking at. Just for reference, when we think about who sells soybeans into the global market, we have two large sellers. We have some stiff competition in the global market. And that's the blue line, which is Brazil. So this shows Brazilian exports. This is exports, not production, going back into 2000. The green line is U.S. soybean exports. The purple line is Paraguay, and the black line is Argentina. Now, Argentina does produce a lot of soybeans, but they crush the soybeans first. They don't export a lot of whole soy. Most of it's crushed, and they export the oil and the meal. So when we think about whole soy, about soybeans as a whole product, it's really two big countries that export, the United States and Brazil. And again, Brazil has been the dominant exporter globally for quite a few years. The red line is Chinese imports. Now that's all soybeans that they buy. Some of it's going to be from the US, some of it from Brazil. The reason I want to point that out is notice that the current USDA forecast is for a reduction in the amount of soy imports by China. And part of that's because their economy is slowing. People are not eating quite as much pork as they were in the past, and they're becoming more price sensitive. So the point I'm making is that the Chinese demand is also starting to slow, even because of economics, even before we add any kind of trade war or trade issues that might be coming up. So the other issue then we need to be focusing on is, what does the weather look like in Brazil? Just wanted to show a map of how big Brazil really is. It's a very large country. So when we think about weather, you have to be thinking about, where is the weather occurring? Just because they say, well, it's raining in Brazil, doesn't really mean a lot. It's a matter of, where is it raining in Brazil? Okay, so this is where soybeans are produced. We've got several big producing states. The one that everybody wants to talk about is Mato Grosso. Most of the expansion in their planted acreage has been in Goiás, which is to the east. And you have Mato Grosso do Sul, which is also a very large producing region. And I want to point those out and highlight those specifically, because that's the northern growing regions where they're going to have not only large production, but that will be the first soy to be harvested. So we're going to have the best yield implications early on in the season coming from these regions. When we look at soil moisture, now this is careful, I want to be careful. This is soil moisture anomaly. So we're looking at the current soil moisture conditions relative to normal at this time of year. So if it's white, you're looking at very common or very typical soil moisture conditions. If it's green, it's a little bit wetter than normal. If it's that brownish or yellowish, it's a little bit drier than normal. So notice that we do, most of Mato Grosso, as well as Goiás, is in very good soil moisture condition. We do have some issues that are starting to show up with dryness in this Mato Grosso do Sul area. Again, that's a little bit further central production zone. And then we get into southern part of Brazil, and again, pretty typical weather conditions and typical soil moisture conditions. This is the map of the Vegetative Health Index, NDVI. So again, what does the vegetative health look like compared to normal? So we're looking at, what do we see today in vegetative health versus normal? It gives us an idea, if there are some problems showing up, how large an area, what kind of land mass are we looking at? Now, this is not just soybeans. This is all vegetation. So it could be soybeans, it could be corn, or it could be cotton, or even forest or pastoral land. Now, notice again, Mato Grosso looks pretty average or slightly above average. Mato Grosso, Goiás, looking at above average. Mato Grosso do Sul, about average from from a vegetative health standpoint. We get into the southern regions, pretty good vegetative health there as well. So in general, the crop out of Brazil is looking very good at this stage. Looking at Argentina, again, Argentina, it's a relatively narrow country, but a very long country. The core producing region is in Cordoba, Santa Fe, and Buenos Aires. Primarily Cordoba and Santa Fe is the two big regions for both corn and soybean production. We look at soil moisture anomalies. Okay, it's looking very normal. Soil moisture conditions are very normal at this stage. And we look at the vegetative health. There are some areas that are showing a little bit of stress, but again, I want to caution everybody that the soy crop as well as the corn crop is a little bit behind. Rephrase, it was planted later because it's further south. It's a little bit cooler, so the crop is not as well developed. So it's just really coming out of the ground. It doesn't have that nice green lush color that we would typically see. So I'm not going to put a lot of weight on the vegetative health index right now at this stage of crop development, but it is something we'll be watching. And right now, the current conditions are for the expectation is for some pretty good production out of that region. So finally getting to price, and this is where really what I wanted to try and follow up on. Right now, there's some negative news in the marketplace. We have a very large crop coming from Brazil. The weather conditions in Brazil and the forecasts are for favorable weather conditions. The same thing for Argentina. They've got favorable planting conditions. It looks like the growing conditions so far have been very favorable. And we have then this threat of what is going to happen within the international trade arena, in particular trade with China. Obviously, again, I wish I knew what was going to happen. I wish I could provide some better insights, but this is all developing as we speak. Okay, so when we look at today's prices, this would be for January soybeans, we are at the lower end of the range. And I know a lot of people are not terribly excited about trying to sell their soybeans at these price levels. What I do want to caution you is if we do get a rally in soybeans, and the blue bars that I drew in on this graphic show those psychological barriers where we've seen a pop in the marketplace and then all of a sudden a retracement where prices have come down again. So if we start getting some positive news in the marketplace and prices begin to rise, the big question is how high will they go? And what I'm cautioning everybody is, given what we see for inventories as well as the psychology in the marketplace right now, if we do get a rally, I'm expecting the rally to be relatively small and for those price rallies not to last very long. We're not going to have one of these nice, big, long building rallies like we've seen over the last several years, which means that you're going to have to be a bit more aggressive in trying to price, as well as the strategies you use to be able to get higher prices out of the marketplace. Okay, so my recommendation is that you try and pick a pricing point. Pick a pricing point either in the cash market or the futures market and say, at this price, I would be willing to sell more. Work with a broker, work with your local elevator or processing plant. Try and lock those contracts in saying, if you get to this price level, I'd be willing to sell some additional bushels, and then put it on autopilot. Do that math, do the calculations right now today when you have some time. You're not getting caught up in the emotions or the heat of the moment. Try and make those decisions, put in those sales price, and put in the orders, and try and get some products sold. This is one of those crop years where we're going to have to continue to work on it, and we're going to have to keep chipping away at it. When we get a little bit of a rally, we're going to have to try and make some sales, and we're just going to have to keep working at it. The challenge we're going to face is by the time we get into that January, in particular the February time period, unless there's some kind of major crop production problem in Brazil particularly, I think we're going to be looking at some relatively low and stable prices the rest of the winter. So we have some window of opportunity, I think, in the next couple months to try and get some of our soybeans marketed. But beyond that, it's going to be a struggle. We're going to need to have something major shift or major change in the marketplace. And yes, there is still some downward pressure in markets. If we do get into another second round of major trade war between the United States and China, that can definitely have an impact on soybeans.